Joining us now with his reading of activity in the equity space is Sean Culverwell from Anchor Capital. Hi Sean, good to chat to you once again. Gosh, a very strong day on the JSE, and I suppose if we want to have a look at this, I mean, Pan-African's H1 results says it all. It shows exactly what's happening. Strong.
Yeah, there's a lot to like across the mining results out today. For Pan-African specifically, earnings up 5x, debt cut materially, probably going to be in a net cash position fairly soon. And that's allowed them to declare a maiden dividend, which could ramp going forward, given if the gold price remains where it is. Also, its all-in sustaining cost of production is around $1,800 per ounce. So with the gold price at about $5,000 per ounce, it's a pretty good setup.
Yeah, it certainly is. I mean, also, okay, let's go to Grindrod now as well. They got their trading statement out, also doing very well.
Yeah, so I think despite earnings guided to be up 4 times, you have to look at the underlying operations. So strip out the net profits relating to the foreign currency reserve release. So on a core basis, earnings are expected to be up about 17.5%, which is largely what we were expecting. But seemingly Mozambique is having a bumper year, and it does give credit to their acquisition of the Matola terminal. They also own a quarter of the Maputo Port Development Company, which holds the main concession to Maputo. So perhaps they may be looking to increase that stake in the future.
Yeah, right. That's the good news for today. Looking at Merafe and just reading that story now on those electricity tariffs, it's such a battle, isn't it?
Yeah, no, it's tough. They're really struggling on the margins. So positively, Line Smelter and Steelport is restarting and is expected to get to 100% production by March. But unfortunately, even with the tariff offered, it just doesn't make a big enough difference in the margin equation to support them sustainably over the long term. Same applies to the Boshoek and Bonacorp smelters. So they said in their announcement they need another 25% cut to what NERSA has already offered, and it's difficult to see how that is going to get funded. So a worrying time in the chrome smelting sector and the related jobs.
Yeah, they need to sort that out, and soon. There is a plan by government, but I'm not sure if it's happening at the moment. So, right, let's go back to some good news, okay? Let's not bring things down. DRD Gold, I'll be chatting to their head, Neil Pretorius, later on in the program. But look, they're shooting the lights out. The gold price is right up there.
Yeah, so as you would expect with the gold price, excellent results. I think other than the high gold price and the margin expansion, they did record very good progress at the Far West Gold Recoveries and Ergo growth projects. And then also their solar projects have delivered very good operational and cost benefits, which is definitely a positive. These results were well flagged by the company, so should already be reflected in the valuation, but positive nonetheless.
Yeah, absolutely. Right, markets in the US waiting those US Fed minutes at the moment. So we'll have to wait and see what happens there. Sean, what's your take on that?
Yeah, so I think that the minutes will be important because they'll show the discussion taking place, which is important because of the Fed's dual mandate. Obviously, we got a soft CPI print from the US. But the labor market remains in a very healthy position. So the market will sort of be assessing where the debates and perhaps the shifts in tone and take that as a gauge for where we're headed. But the US market certainly needs some relief from the sell-offs we're seeing in big tech and software.
Yeah. Right, let's talk about those big sell-offs. I mean, AI at the moment, there was that whole explosion. They were going to invest capital. And things have gone a little bit, I won't say the bubble's burst, but it's starting to wobble a little bit.
Yeah, so I mean, specifically in the software sector where you've seen a lot of sell-offs breaching the 30 to 40% mark, I think many investors will say that earnings for many of these software companies will still be strong over the next couple of years. And that may be true, but I think as long as the market is questioning whether their terminal growth rate, longer term growth rate is under threat due to AI or any competitive concerns, it's unlikely that these businesses will regain the valuation premiums that they held in the past. So there's no doubt there's a lot of software vendors that will see a drop-off in demand just because of that substitute. But those with very good competitive advantages are probably giving you a great buying opportunity here.
Yeah. Right, let's stay with the United States and, of course, their talks with Iran. It seems to be that tensions are sort of calming down a little bit at the moment. They've got that big armada placed just off the coast. That's the United States wanting to attack if they feel they have to. It seems to be better. How are the markets reading this?
Yeah, so I think the markets understand that there's still a long way to go. I mean, they just reached an understanding on the main guiding principles in talks aimed at resolving, their long-standing dispute. But it doesn't mean that a deal's imminent. And I think, but irrespective, I think it's a net positive at the moment for resolution expectations. And you saw that in the oil price, which came off a bit, just given easing fears of conflict in the region.
Yeah, absolutely. Right, let's come back then. Capitec overtaking First Rand with its valuation. Look, that was expected. It's Capitec, like I say, shooting the lights out.
Yeah, I mean, what a remarkable story Capitec is, and credit has to be given to all involved in the growth of that business. But I think even given its run, we are still positive on the business, and banks as a whole, to be honest. They remain well positioned into these March results season, supported by good loan growth, credit losses are easing, and fee income is strengthening. And all of that's more than offsetting the margin pressure that they're seeing. So banks definitely remain a big overweight position for us, and so does Capitec.
Yeah, all right, hold that thought there. Before we move on to your stock pick, let's reflect on the counters that have found favour with your industry peers.
Deutsche Telekom and don't be fooled by the name. They make about 60% of their profits in the US through T-Mobile. Last time we were up with JP, I mentioned that I suspect there's a revival in the Rust Belt in the Midwest in America because of various reasons.
Yeah.
T-Mobile is exposed to that rural area, which has been economically depressed for a very long time, in that they provide fast 5G services.
I'm picking a Dutch company called Adyen. It's a payment technology provider. So basically it allows merchants or businesses to accept payments, credit card payments, and all kinds of electronic payments. It's one of the major players in the global payment space. The share price took a huge knock in the past week or so because of results that were just so-so. The expectations were too high, and the guidance looking forward was also a little bit disappointing, but they're still growing very strongly.
Right, Sean, two big ones there at the moment. We had Deutsche Telecom, we also had Adyen as well. Your thoughts on both?
Yeah, so Deutsche Telekom, as it was pointed out, T-Mobile is very important for them, but even more so given their base market, Germany is really struggling at the moment. But T-Mobile competes with AT&T and Verizon, and in our eyes, these aren't great businesses. Competition is stiff, they compete on price, and CapEx requirements are significant, which makes generating high returns on capital very difficult. So not the type of business we like to own. Then onto Adyen, I agree with JP that the payments providers are getting caught up in the software sell-off. And that's a bit misguided because nobody's going to sort of vibe code payment rails and also the licenses underpinning those businesses. Adyen does seem attractive, just given the rating and growth expectations, but I think for it to restore investor confidence and perhaps its valuation premium, it needs to be a bit more consistent, given management's guidance has been quite volatile in the past couple of months.
Right, those are those two. What are you looking at for your stock pick on this lovely Wednesday?
Yeah, so I like Boston Scientific after the recent sell-off post-results. So Boston is a leading cardiovascular medtech company that is now sort of trading at parity with its medtech peers, despite it delivering double-digit organic growth, while peers are delivering around mid-single digits. So two concerns investors have at the moment are around its two leading products, so FARAPulse and Watchman. So for FARAPulse, new competition for pulsed field ablation for heart arrhythmias has entered the market. However, the PFA market is still growing extremely strongly. So even if Boston does cede some market share, in that business, they should still do very well. Then on Watchman, so they have an important clinical readout in March where Watchman is benchmarked against anticoagulants for stroke prevention as a first-line treatment, and we think that data is going to be extremely robust and could provide sort of a near-term catalyst for the share price, given growth estimates for Watchman should be revised up. So yeah, we really like Boston Scientific.
That really is an interesting one, I must admit. Thank you so much for that, Sean. That was Sean Culverwell from Anchor Capital.